Hello everyone. I have brought to you part 1 of the chapter 4 today. Please notice that I'm jumping a chapter here because chapter 4 is a very easy and simple extension of chapter number 2. Many of the concepts that we have covered in chapter number 2 would be repeated here. So it is easier to do this. Okay. So, first thing first. Okay. What is job order costing? A job order costing, sometimes also called job costing, is a costing system. A costing system is something which gives companies a system so that they can figure out the per unit cost of any job. There are two types of costing systems companies use. One is called job order costing, which is the one you are studying here. And the second one is called process costing, which you will probably learn later. Okay. So companies do not pretty much have a choice as to what kind of costing system they would put in place. The nature of their business decides it for them. For job costing, the companies use it when their product is customized or made to order. Okay, which is what we are saying here. Okay, what does that mean? The nature of my business is such, for example, I am a hospital. Okay, lots of patients come, but no two patients are the same. So I have to track their material, their labor, their overhead individually. Similarly, if I'm a construction company and I'm making a school and at the same time a bridge, I have to track the cost separately. If I'm a wedding planner, okay, I have to track each wedding separately. If I'm a wedding dressmaker, same thing. I can't average the cost of all dresses that I make. No, I have to keep track of how much material on each job, etc., etc. So, job order costing is a system where companies are customizing their products. All right. I need to erase this before I move on. Just a second. Okay. This is not letting me move. Okay. So, as I said, the costs are tracked job by job. A job is any project. Okay. It could be a wedding, it could be a patient, and so on. Okay. So, the reason, as I said earlier, I'm picking chapter number 4 after chapter number 2 is that I hope that the flow of cost that we learned in chapter number 2 is fresh in your mind. So, what is a flow of cost? A flow of cost basically is a system. Remember? Oh, I'm going to write this one again because I was trying to use a pen. A system where we start from a direct material account and we use the direct material account to put into our work in process account, and we combine it with direct labor and manufacturing overhead, and we make something. When something is made, it is completed, we'll call it cost of goods manufactured, which then moves to a finished goods account. If we are lucky and the goods are sold, then we have the final product of our flow of cost, which is cost of goods sold, which that finally goes to an income statement where we subtract the cost of goods sold, as you should probably know, from revenue, and then we come up with gross margin. Okay, so this is in brief the flow of cost that we use. Okay, this is the number which is the star of the show today. Manufacturing overhead in the general scheme of things is what we are going to concentrate on, but in a few minutes. Okay, so let us clean this one up and move on. Okay. Also recall that when we talk about any manufacturing cost in particular, any manufacturing company in particular, we talk about three cost components. Okay. We talk about what are the three cost components we talk about? We talk about manufacturing cost always comprises of three things: direct material plus direct labor plus manufacturing overhead. Now, these two by nature are direct. What does direct mean? Recall from chapter number 2 that direct costs are those costs which can be directly traceable to a cost object. In our example, for example, if I'm talking about a hospital, what are the direct costs of a patient? Whatever medicines he is given, how many hours of doctor's time or surgery has he taken, etc. What is not clear is the indirect cost. For example, how much of the total hospital's rent, cleaning, insurance, boarding, lodging, taxes should be allocated to any one patient. So indirect costs need to be allocated or assigned. Direct costs do not need to be allocated or assigned because they are already allocated by definition. Okay. So one more reason why manufacturing overhead is the star of our show here. Okay. So let us talk about the three components of costs. Direct material, refresh your memory. These are raw materials which are directly traceable to a job. Then we have direct labor. We assume that typically direct labor is not known for each job or each project. Okay, if I'm making a wedding dress, for example, okay, I know how many hours my labor has taken in making that dress, and when I multiply those number of hours taken by the rate that I pay, suppose I pay $50 per hour, and the dress took 20 hours to make. So 20 hours multiplied by $50 per hour will be the direct labor charges. So we assume that it is also known. Okay. What we also know, okay, are manufacturing overheads, which by definition are all indirect costs. For example, rent or mortgage of a factory where I do my work, all the utilities, supervisors, salaries, taxes, rent and repair and maintenance, all those kind of things, depreciation, all these are manufacturing overheads which have no direct way of being allocated to a client or a job. So we have to figure out the system of allocating them or applying them. You heard a little bit about cost accumulation and cost assignment in chapter number 2. We are going to talk about that essentially in a little bit more detail. Okay. So now let us talk about manufacturing overheads a little bit. Okay. Manufacturing overheads. Oops, sorry, I forgot. I need to catch this pen again. Manufacturing overhead, let us suppose, is like a T account. Okay. Now, typically, manufacturing overhead, actual expenses, if you think about a journal entry, for example, for rent paid, okay, what would be the journal entry? It would be rent expenses debit, right? And cash, bank, or accounts payable credit. Similarly, if you pay your utilities bill, you will say electricity expenses debit, cash, bank, or accounts payable credit. So all the actual expenses typically come here on the debit side. So expenses are always debited, all right? In your book, they just follow the convention that all the actual accounts, they call them control account. So they call it manufacturing overhead control for actual expenses. Okay. So that is the nature of manufacturing overheads. Now, actual expenses, whatever they are, the total is not known until the end of the year, which means what is the exact total I would know only on 31st December, right? But suppose I am a hospital and a patient comes on 5th January and requires a heart surgery. The patient stays for a week and now he's leaving on 12th January. I have to give him a bill. I don't know my actual overheads because they'll be known only at the end of the year. So, because the actual overheads are not known till the end of the year, companies typically come up with a trick and they instead use what we call applied overhead. Okay, so most of this first half of the chapter is to get comfortable with how to do applied overhead. Applied overhead is typically a two-step process, which I'm going to show you. Step number one is called calculating a rate. Okay, calculating a rate meaning when the year has not even begun. In the New Year party, when everybody else is busy partying, companies are typically figuring out if a patient shows up tomorrow morning, what manufacturing overhead rate are we going to charge him? How do they decide this rate? Typically, the rate is decided, it's got several names, so I'm going to take some name to it. Predetermined overhead rate or budgeted overhead rate or estimated overhead rate, whatever you may call it. Okay. So this rate is typically calculated by taking some predetermined or estimated overhead, let's say from last year. Estimated overhead dollar amount is divided by some estimated allocation base. Let us take the example, which is very common also, estimated direct labor hours. Okay, so what does that mean? This means that the company is deciding, for example, my predetermined overhead rate, sorry, my pen didn't get caught. If suppose last year the company had or hospital had $1 million of manufacturing overheads. Okay. Suppose they had 100,000 patient hours last year. So they say, as a result, I am going to charge $10 per hour from each patient. Okay. So common base can be direct labor cost. It could be direct labor hours. It could be machine hours. I'm simply taking the example of direct labor hours right now. Okay, so that is your step number one. Typically, companies will decide before the year even begins as to what our manufacturing overhead rate would be. Remember, it is based on two estimated numbers. Okay, this is called step number one. The second step is now a patient has come, he has taken the treatment, and we are ready to give him a bill. How do we give him a bill? Remember, we can't give him an actual overhead bill, so we have to give him an applied overhead bill. Okay, how do we apply overhead? We take this predetermined overhead rate of $10 an hour and we multiply it by actual number of hours that he stayed. Suppose he stayed for 30 hours. Then we say we are going to give him an applied overhead bill of $300. Okay. Now that I have applied overhead, I'm ready to put my three cost components together. I do direct material plus direct labor plus my applied overhead, which was $300. Let us just make up some numbers. Suppose my direct material was 100. Suppose my direct labor was 200. Okay, which means the total bill I should give to this patient is $600. Okay, which is basically what the object of job order costing or any costing system is, how to come up with the total cost of a job. Okay, and by using this two-step trick, step number one, calculating an estimated or apply predetermined overhead, sorry. And step number two, using this predetermined overhead to figure out how much overhead should be applied to each job is the second step. Once I have that, I can put all the numbers together and I am ready. Okay, so that's basically the summary. I'm going to erase this and then I will show you the second step. Second step, as you can see, is overhead applied on the basis of whatever rate you calculated in step 1 and then whatever is the actual you used. Okay. Third and fourth, okay, are basically telling you what I told you just now, how to figure out the total cost of a job. Sorry, my pen didn't disappeared again. How to figure out the total cost of a job. Okay, once I have the total cost of a job, adding these three ingredients, I am also able to calculate profit from each job. I know what is the job that the patient or the client is paying me, what is my cost of doing this job. So I am ready to figure out my profit if the need be. Everybody okay? Now let us look at the numerical example. Okay, so we are going to practice the 4 steps that we have just learned. We are going to try to work on a furniture company. Furniture company, okay, takes custom orders on furniture. I'm going to remove this screen sharing business at the bottom. Okay, so now they have done some work on this job number 101. You are given some data. Let's take a look at the data. The company has used direct material of $5,000, direct labor of $3,000. They have a predetermined overhead rate. Remember, in this case, you are given the rate, you don't have to calculate it. Okay, it is 150% of direct labor cost, dollar amounts. Okay, so we'll keep that in mind when we continue. Okay, job in hand was completed during the month of April and it sold for $12,000. Notice, because I know the selling price, once I figure out the three cost components, I can combine them and I can subtract them from my $12,000 to figure out what the profit would be. That's where we are going. You with me? Okay. I am asked what is the amount of manufacturing overhead applied. I am also asked what is the total cost of job 101, and finally I'm asked what is the profit that I'm earning on the job. Okay, so how would you do this one? How would you calculate manufacturing overhead applied? Remember, manufacturing overhead applied is a two-step process. Step number 1 is already given, okay, which is step 1, which is how to calculate a predetermined overhead rate. Okay, all you need to do is to do step 2. Can you recall what the step number 2 is? You take predetermined overhead rate and you multiply it by, in this case, actual direct labor cost that we have spent on this job. Okay, let us clean this one out and let us show you this first step. Okay, so manufacturing overhead that we are applying to this job, because the rate was already given, okay, is the rate of 150% and direct labor cost, because I was told I should use direct labor cost. Okay, I put these two together and I have the amount of manufacturing overhead applied to this job. Everybody okay? All right. Once I have the manufacturing overhead applied, I can easily calculate the total cost of this job by direct material, direct labor, and the third number that I just calculated, applied overhead. Okay, so I have this coming from here, I have this coming from here, and this one I just calculated, so I add them up. So this is the total cost of the job. Now you can see it is not hard for me to do the third step, which is to calculate the profit. Okay, so the profit on this job, my selling price was 12,000. However, my cost that I calculated in step number 2 is this much. So I'm actually losing $500 on this job is basically how my math has come out. Okay. So everybody okay with the 3 steps? Okay. I have made a summary. This is all we had to do for the first half of the chapter though. However, I have made a summary of all the formulas that we have used that you might need. Okay. As you by now know, the first formula that you need is a predetermined overhead rate. Okay. Important thing is to remember that predetermined overhead rate can have any kind, pen is this not coming up, can have any kind of allocation base. Okay. The most common one is direct labor hours, but it could have direct labor cost. It could also use machine hours. Okay. It could use direct material cost. Just carefully look in the question as to what is the allocation base you are given. 90% of the time it is labor hours, but it could be something else. Okay. All right. So that's the first formula you need. Second is to continue and apply overhead. You just saw this predetermined overhead rate calculated in step 1 multiplied by whatever is the actual quantity of the base that you used in step number 1, actual direct labor hours, actual direct labor cost, actual machine hours, and so on. Okay. The third thing that you do is how to put together the total cost of a job. Total cost of a job is direct material, direct labor, applied overhead. Okay. All these other things, okay, cost of goods manufactured, cost of goods sold, okay, profit obviously you just saw, but cost of goods manufactured and cost of goods sold is basically a product of work in process or finished goods account. Okay, you know the flow of cost, but I'm going to write it down. Beginning inventory is here. Okay, something gets added in here. Okay, something goes out of here, and ending inventory is here. That is the general nature of each of these accounts. Something comes in here. Okay, this is the direction, and then something goes out of here, which is cost of goods sold. Okay, so this number is cost of goods manufactured. Okay, which is the formula here. Okay, and this is cost of goods sold, which is the formula here. Okay, so profit basically is whatever is your revenue minus job cost or cost of goods sold, whichever way you would be given in the question. Okay, interpretation should be the same. Okay, all right. So this is all we have for you. Okay, we'll see you soon. Have a great day.